to All right, Kathy, we are back for part 2 of the Tax Magic podcast with my favorite accountant for over 20 years. We just finished the episode where we talked about my new company that I'm setting up and closing up the other companies. And now Kathy is going to teach me how to, I think, choose the state, the companies, and then how to register the company. So take it away on the Tax Magic podcast.
You
Kathy
got it.
Cregan.
You got it. Welcome to the Tax Magic. I'm going to put you in that hot seat.
Okay. All right.
okay.
I'm ready.
So,
I'm ready.
All right. Here we go.
I got ice.
So what we've done is we've narrowed it down to C Corp LLC. Now remember, the LLC can be taxed as a single member. It can be a Schedule C, which is a single member. It can be taxed as a C Corp as a single member. And you can make an S Corp election. Now, what we've decided with yours is because you need to be both members of your multi-member LLC,
Okay.
you're going to have 2 entities.
Okay.
You're going to have a C Corp that is going to be a member of your multi-member LLC, and you're going to be the other member.
Okay.
So we have Coach Deb Inc. That's your C Corp.
Okay.
And it's going to be a member of AI Chillify LLC.
Got it. Okay.
Deb's going to be a member as an individual as well.
Got it.
Those 2 become the owner of your mothership.
Okay.
Okay.
So is mothership AI Chillify?
Right, because that's where the
Okay.
money's going to be.
Okay.
I used to refer to those as cash cows, but
Okay.
they're not always cows. Sometimes they're pigs. But that's where the money comes in.
Right.
That's your
Okay.
money. That's your money maker. Shake your money
Okay.
maker.
All right.
So, yeah, that's it.
All
So
right.
what happens now is we pick the state. Now, we're going to use Florida as an example because I live here and it's
Okay.
easy.
Yep.
States like California and New York have very specific laws and very specific rules. And if you want specific answers, you're going to need to come into the collective, because that's not something I'm going to answer here with this.
Before we kick off, just let
Yeah.
people know what the collective is versus, because we're on your Tax Magic
Podcast, right.
which is a lot of free tips for the general public. But what
Right.
is the Tax Magic Collective? Tell us a little bit about that.
Good question, because I
Okay.
forget to say that. The collective is a group that we have created that's a private membership only club, if you will, where you can come in and you can have conversations with other members when I happen to not be there. And you can have conversations with me where you ask your specific questions and I'll get you specific answers. If I don't know the answer, I'll find it. You can bring your CPA in, and we will not be charging for CPAs, specific client CPAs, to come in and listen, answer questions, because I don't know everything, and they don't know everything, even though they might tell you they do, they probably don't. So what we want to do is we want to make this a collective where the collective energy reduces everybody's tax bill by giving you more information, because the more you know, the less you owe. And that is my registered trademark, if anybody ever asks. Because the more you know, the less you're going to owe.
I feel like over the past 20 years that I've had you as my accountant, that is a fact. And I love it. And I think anyone that I've referred you, they're loving the fact that you just keep educating them and saving them on their tax bill. So thank you. Thank you.
Yeah, you know what? That's my passion. I mean, I talk about it at birthday, Christmas parties, and everybody has something about taxes. And I just go, oh, by the way, did you know? I think educating people is key, because you know your business better than anybody else does.
Yeah.
And if I teach you what the law says and what the code says, you can then apply it.
Right.
Or you can change what you're doing
to
apply it and
which
win.
is what you're helping a lot of people do right now. This is awesome on the podcast.
That's the goal.
So you're going to give us from Florida, because that's where you are and you have a lot of clients. Yeah.
Right. That's the example. But remember, every state's going to be different.
Yep.
So I like LegalZoom. I mean,
Okay.
I know people go, oh my God, LegalZoom. Look, they're in every state.
Hmm.
They do all the paperwork. They register everything. You don't have to have them get your EIN. You can do it yourself, but they'll do that too. And they're reasonably priced. I've actually used them in the past when clients wanted to use me and I didn't want to do the paperwork. We use them.
Right.
So
So
they'll
they're
do it
good.
right.
Okay. Okay.
So
So
we're in
you
Florida.
recommend, like, if people are listening to the Tax Magic podcast, you recommend that says, hey, if you're starting a new company, set it up and have LegalZoom do all the paperwork and all the
Correct.
filings for you to set it up.
Correct.
And it's
Correct.
good. Now, do you think, since I am the founder of AI Chillify, do you think LegalZoom is using AI to do a lot of the things that they're doing?
Oh, I'm sure they do. I'm sure
Okay.
they do. The IRS has been using AI for 3 years now.
Oh, wow. Did
What
not
people
know
don't
that.
know this, right? But I'm doing a mini series for the collective on
Hmm.
what the AI is doing. I'm going to do a few
Interesting.
little mini reels podcasts, but the biggest portion is going to be over in the collective on what they're really doing with AI
Hmm.
because they've been using it, and that's how they're choosing audits. That's how they're looking at risk factors. So they're
What's the
look.
I didn't mean to interrupt, but what
No,
you
no.
talked about audits, and I know you know this because you've guided us for many years. What is the type of entity, if that's the right question, that gets audited the most by the IRS?
The most is the S corp or an estate trust. Those
Okay.
are the two. The estate trust is when you die,
Okay.
and they if you're filing a 990, let's be honest, you're filing a 990, you got over $15 million in assets. They're looking for income. They're looking for money.
Okay.
And
Yep.
the other is the S corp
S corp.
because
Okay.
the S corp requires a lot of compliance and a lot of rigidity in what you can and can't do.
Okay.
So they can assess a lot of penalties when you do it wrong. And so that's why they look at that. Now, all of these are probably under 2%,
Hmm.
but 15% of Schedule Cs get audited as of the last statistic I saw, which was 2022, I think. So Schedule C, which is your individual, which by the
Okay.
way is the absolute highest you can have,
Hmm.
which is going to be 37% highest marginal bracket plus 15.3% on your first 165 or $170,000. That's your highest tax bracket you can have.
Okay.
So I don't recommend that. I
Mm.
mean, very rarely will I say, "Oh, go be a Schedule C or a single member LLC," because you're going to pay more. Now,
Right. And
a
why?
lot of, a lot
Why
of,
pay more? Yeah.
why?
Yeah.
Why?
Yeah.
Because another CPA will say it's easy.
Right.
It's the easiest one, and it is.
Got it.
Um, but easy doesn't necessarily translate to paying less.
Yeah. Yeah. Okay.
So keep that in mind. So
These are good tips. I love it. So use
yeah,
LegalZoom
I do.
and try to avoid S corps if
Yep.
you want to get
Yep.
audited less. Okay.
Yeah,
What's
exactly.
next?
So
Yep.
what you do, you've chosen your state, and we're
Hmm.
going to do Florida.
Okay.
You've chosen the entities because you're only a single person.
Hmm.
You don't have another member in it. We're going to create your second member.
Okay.
Your second member is going to be your C Corp, Coach Deb Inc. Okay. And so you create your Coach Deb Inc. first because it's going to be a member in AI Chillify.
Got it. Got
So
it. Got it.
you,
Okay. So the
it's
first Coach Deb Inc. gets created first, you said, or AI Chillify?
correct. Nope,
Okay.
you first.
And then that's going to be a member of AI Chillify.
Correct.
That makes
Correct.
sense. That
It
so
does.
even though AI Chillify is the mothership, you need Coach Deb Inc. to be created because it's a member of AI Chillify.
Correct. And
Okay,
we're
I'm
going
starting
to
to
use
understand this.
we're going to
Yeah.
use that member EIN
Okay.
when we apply
Okay.
for the EIN of the AI Chillify.
Okay. So AI Chillify single. That's the
It's
single
dual
member.
member. No, it's a
Dual
dual
member,
member.
and it's
And
going to
it's an
have Coach Deb as the member
and you. So
and
it's going
me.
to have Coach Deb Inc. and it's going to
Right.
have Coach Deb real person.
Me.
So
Okay.
you're going to have two. Want me to get my finger puppets?
Yeah. Me and then the
We,
ink. Got it.
yeah.
Got it.
So,
Yep.
so that's
Okay.
how you create a member
Okay.
by forming a corporation that you will be the sole owner of.
Okay.
And you won't have double taxation on that if you don't pay dividends.
Okay.
And if you think about how long it was before Amazon or eBay or any of those ever declared dividends, you got a hot minute before you're going to have to declare a dividend, and you're going to have to make a whole lot of money. So,
Okay.
and the reality is the money's going to flow up from AI Chillify, so
Okay.
you can control how much goes where
Okay.
and to
Okay.
whom. Okay,
Okay.
that's the goal there. So,
Okay. I love
so
it.
you've registered or formed at sunbiz.org in Florida.
Okay.
The C Corp. Now you've got your EIN, and wait until you get your document back that says, look, we agree, you now here's your articles of incorporation. As of today, 12/20, you are a corporation. Wait until you get that paper,
Okay.
because if you don't and they deny your application at the state and you've already got your EIN at the IRS,
Right.
you have created a really big mess. Because
So
now
wait
you
till
have
you
to
get the
call
paper. Yep.
just be patient.
Okay.
Wait a week. It's
Okay.
usually a week to 10 days.
Okay.
So, and the date of the corp goes back to the date that you filed the original paperwork. You get to choose the date.
Okay.
You can go back 3 days or forward 3 months. So,
Okay.
so you just pick the date. So
Okay.
then you go into the same website at sunbiz.org and
What is it? Wait,
you
what's the website? I'm going to write this down on my browser.
sunbiz.org.
How do you spell that?
sunbiz.org. Now don't do .com. Well, it might be .com. Hang on. Stand by, Houston. Because
we'll
one
look
of
live.
them,
This is a live show, so we're going to go sunbiz, like
right, dot,
sunshine.org
sun,
or .com. Let's see.
yeah, .org.
Okay. Okay.
I think
.org.
.org. Because if
Yeah,
you
it brings you
choose,
to like Florida Department of State.
that's it. It's .org.
Okay.
So .com, if you put that in, it takes you to a mimic company that's going to charge you more to file the papers at sunbiz.org that you could do for $138.75.
Okay.
So stay away from the
Sunbiz.org.
.com.
Okay. Here we go. So sunbiz.org. Is that right on the screen?
That is correct.
All right. All right.
Thumbs up.
Okay.
So
I'll
now
be your producer while you be my creative accountant. I like
there
this.
you go. That's me, the creative
Okay.
CPA. Thank you,
That's
my
right.
5-year-old child when he was 5-year-old.
Yeah. By the way, that story is a great story. Tell everyone that's listening to the Tax Magic podcast why you are the creative accountant.
Because my kids are now 33 and 35. And my youngest son was, I normally didn't work when I had the kids after school, but I happened to have a late appointment during tax season. So I picked up my kids from school and I brought them to the office where I had this little play area. And the clients were talking and they had kids, so they were playing. And my youngest goes, I know what my mommy does. And they said, oh, I said, look, isn't he cute? And they go, yeah. I said, hey, Trevor, what is it I do? She goes, Mommy, you're a CPA. I said, oh, that's me. I'm a CPA. Trevor, what does that mean? He goes, creative public accountant. And I went, from the mouths of babes, there you have it.
And you are. And you
I
are.
am.
Like, he was an insight into you truly are a creative public accountant because you read the tax code and now you apply it, but you do it creatively where you're saving everyone in the legal zone, right? Like you're following what the tax code. Yeah.
Well, I'm not going to do something illegal. I don't want you to either. Because not only could you be fined, you could be put in jail. Thank you, Leona Helmsley. We don't want that. So you stay within the gray area. And let's be honest, the billionaires have created this. We're not billionaires. But why can't we use the tax code like billionaires? I mean, it
I
doesn't
heard
say
you might have
can't.
I heard you have records of billionaires. So we're gonna take advantage of all of their loopholes.
As a matter of fact, I have somebody's tax return from like 2020 that was made public
That we
and
won't
then pulled back
mention.
quick.
We won't mention
Fascinating.
their name because this is
We
a
won't
public
because we don't want to
podcast,
get in trouble.
but hint, hint, nudge, nudge, say no more.
Yeah, and
Yeah.
fascinating read, by the way. So the other
Okay.
thing about this is when you file a tax return, the AI reads it.
Mm,
So file what you want them to read
okay.
and how you want them to read it.
Okay.
So it's kind of you really want to be careful when you file so that you're following the rules and you're following it so that it benefits you, not them.
Got it. Okay.
So
I
you
love it.
kind of read it. So now what you have is you have two entities.
Okay.
You have the AI Chillify, which is going
Mhm.
to form or file a Form 1065.
1065. Okay.
1065. It throws off K1s, and the K1 is what gets you the income number on your tax return.
Okay.
The K1 is generated from the profit and loss,
Okay.
not from what you pull out of the company in distributions.
Okay.
Two totally different things. And this is one of the most difficult things for clients to understand.
Mm.
I mean, I've explained it to some 10 years in a row. No, what you've taken out of the company is not what you're taxed on. What you're taxed on is what's on your profit and loss,
Okay. Okay.
not the balance sheet.
Mm-hmm.
So we'll get into as brief as I can make a financial statement and accounting, because I hate accounting. Hate it. It's just boring and I hate it. Not gonna do it.
Yeah, you like the creative strategy part of it, just like I like the creative social media strategy, but then the implementation and publishing, that's somebody else can push the buttons. Yeah, that's like an accountant. Yeah,
exactly.
Got it.
Because
I love it.
Because they have no flexibility. You have a debit and you have a credit.
Yep.
You have to put them somewhere.
Yep. Now, let me ask you a question, because
Yeah.
you mentioned a couple forms. K1, what is a K1 for anyone who doesn't know what a K1 is?
A K1 is the partnership's individual reporting of what their percentage or profit portion is from that entity. So it's a informational form that is produced by the partnership or an S corp. It
Okay.
flows down to you
Okay.
or the C corp. So in the case of AI Chillify, you're going to have two K1s. The C corp's going to get one,
Okay.
and you're going to get one.
Okay.
And the beautiful part about the LLC partnership is you don't have to distribute the income based on the ownership percentages like you do on an S corp.
Okay. Okay.
So you could in 1 year move more income to you personally, or more income up to the C corp, depending on what your needs are.
Okay.
So,
and what might my needs be, like buying a house, investing in real estate, studio? Okay.
Yeah, exactly.
Okay.
Needing more income to be able to finance something is the most general one.
Okay. Okay.
You also have the ability to have passive income from a K1
Okay.
rather than earned income. So you'll pay less Social Security and Medicare.
Okay.
Or you can choose to have something like a guaranteed payment for doing the accounting for the books or for the LLC.
Right.
There's specific things you get to do.
Okay.
So what happens now is you've got them in place.
Okay.
You have the partnership
Mm-hmm.
that is your AI Chillify is going to produce income that's going to go up to the C corp and over to you.
Okay.
But in order to collect that income, you have to bank account.
Okay. Okay. So bank account is the next step. So sunbiz.org,
Yep.
then you get your EIN number, and then you go to the bank with the EIN number.
And the documents from the Sundays. But you get your EIN from irs.gov.
Okay.
And you file what's called an SS-4.
SS-4.
Sam-4.
Okay. So you file an SS-4 with IRS?
Yep, and it's online, and you can do it online, and it takes you 5 minutes to get an EIN.
I love it. Easy.
Yep. Yeah, it's
So
easy. It's
anybody
easy.
from what you're advising in this episode is really, if somebody wants to start a business, they can do all this virtually online with LegalZoom, SunBiz if they're in Florida, and then irs.gov.
Correct. And
Okay.
SunBiz, you do it all yourself on there. You form a corporation,
Okay.
form a partnership or LLC, and then from there you wait. Typically, it's running about a week to 10 days. I've never had it go longer than 10 days
Okay.
to get that EIN or to get that entity formation documents from the state.
Okay.
The names can't be the same as somebody else's. So you can add things like group or enterprise or club to somebody else's name. But be careful of trademarks because you get in a lot of trouble with trademarks.
Right.
So,
Right.
so the idea is once you get the name, you get the EIN at the IRS, then you go visit your local banker and
Okay.
you get both accounts set up
Okay.
because you're going to need an account in the C Corp
Mm-hmm.
because you're going to transfer money up to the C Corp so you can pay its bills.
Okay. Okay.
And for example, Code Section 105 allows a C Corp to have a medical reimbursement plan. You don't take any haircuts on that medical reimbursement plan.
So
which
code
means
section 105, you said, is
correct,
a medical?
105. Yep, medical reimbursement. And for example, by haircut, I mean, if you take that deduction on your 1040, assuming you can actually have a Schedule A, you only take 7%. The first 7% of your AGI, you get nothing for.
Okay.
But on the C Corp, it's dollar for dollar.
And explain what a haircut is, because I love these industry terms in the finance market. My boyfriend uses that a lot. You're not actually talking about hair or a cut, but you're talking about.
I'm talking about where they say instead of getting a dollar for dollar deduction, you're only going to get a deduction if it goes over 7% of your adjusted gross income. And your
Got
adjusted gross income is profit and loss, W-2s, interest income, less QBI, down at the bottom.
Okay.
It's before you hit your Schedule A. If you have a Schedule A.
And
right
what is
now,
the Schedule A for someone
Schedule
who
A
doesn't
is
know?
itemized deductions.
Okay.
For real estate taxes, which is now $40,000. It was 10, limited to 10. Interest expense, charity, those are the kinds of things that go on Schedule A.
Okay.
But if you're married filing jointly, it's now like $31,000. So many people don't even file Schedule A anymore because their
Interesting.
standard deduction is higher than their interest in real estate taxes.
Wow.
So depending on what state you're in, man, if you're in New York or California, your Schedule A is back on because you're no longer limited to SALT, which is state and local taxes, is now 40,000, not 10.
Wow.
So your haircut at the individual level on that means the bottom 7% of your AGI you don't get to take.
Okay.
You have to have that first
Okay.
before they'll give you a dime of expense.
But
dollar for dollar, it's a C Corp.
Okay. Okay.
So you put in, you make sure in the C Corp you have a medical reimbursement plan.
This is why you're the creative accountant, Kathy.
Probably.
It's great.
Probably. It's like I'm writing as much as I can off.
I feel like people are going to pause, take notes, do this, pause, rewind, and watch this episode again and again, especially if you're starting a business from scratch. But this is really good information for someone if they want to start a business and they want to be able to do it online and be able to do it very affordably, because you're giving us all these, like, again, LegalZoom, and you just go online to fill this out. So thank you. This is super helpful. What's next?
And then go to the collective and join the collective, and we'll walk you through the rest of it and the specific things you need to do and have.
Right.
Where you can get your minutes and your or your articles, where you can get the documents to make sure you win.
Because you're going to organize all that in the membership.
Yeah, we'll tell you where to do it. I'm not doing it for you. I'm just going to give you the knowledge.
Yep.
Because
and then, but you're doing a lot like what I'm doing with AI Chillify. You're basically teaching people how to take control of their taxes, get the most out, because the more they know, the less they owe. And then you're giving them the power to do this instead of you having, we have to pay you $1,000 an hour, and then you have all the power and all the knowledge and they don't.
Yeah, because I'm semi-retiring. I'm
Yeah.
semi-retiring. I want
Yeah.
to have more fun
Right.
and not be tied to a desk.
Go on more
After I-
cruises.
yeah. And after I
Yeah.
broke my wrist this last time, realizing when I type it hurts,
Yeah.
that just
Yep.
solidified the retirement.
Yep. Yep.
And by semi-retired, if you're already my client and I haven't told you I retired, you're in. If I've told you I'm semi-retired, you're out. Join the collective and I'll still give you info.
Yeah. Well, and that's where people can join the collective and start taking power and control and do this themselves.
And right, and
Yeah.
ask, and I'm going to give you the questions to go back and ask your CPA if they
Right.
don't come on the collective with you, which
Right.
by the way, we won't charge for them.
Perfect.
We
Now,
we want them to come.
you recently helped somebody that was a friend of mine that had an accountant and was not taking a lot of these write-offs, a lot of these like legal things, and they just, I mean, I don't know if it was sheer neglect, if they just didn't know, and they're
No, they know,
okay.
they know, but instead of saying, for example, I'm starting a studio, or I'm starting something creative.
Mm-hmm.
I don't know, a program like Survivor was.
Yeah.
I'm starting that. They
Yep.
basically took that and said, well, that's not a business, you can't do it.
Hmm.
Well,
So they had a personal judgment and they negated something that was just
that,
not.
in my
Yeah.
opinion,
That's a shame.
it's a business,
Yeah.
because she had the intent, she
Yep.
had the formation of the company, she had the
Mhm.
EIN, she had it funded.
Mm-hmm. Mm-hmm.
Now, there was some research and development that now is 100% deductible that then had to be amortized, but amortized is still a deduction that she
Right.
didn't get to take.
Mm.
So we're right now going back to 22, trying to see how much was really missed.
Mm. Mm.
And if we need to, we're going to amend 22, 23. Because
Well,
it's
this
just
is awesome.
not
So
right.
people can
It's not
amend their
right.
taxes if they had a crappy accountant and they
You can go
join the
back.
collective and you teach them, they can actually amend previous years.
Correct. You can go back 2 years and amend.
Okay.
Like right now we're in 25.
Right.
Well, until April, or when they filed the return, be it April 15th or October 15th,
Okay.
you can go back 2 years from that. So 22 and 23 are open until, like, I think she filed in like October.
Mhm.
So then after that closes, it's 23 and 24 because you're working on 25.
Right on. Well, I love this.
So,
All right. What else
yeah.
do we have to do for this episode? And then I know you're going to teach me more, but what else in just structuring it, setting up a
That's it.
business?
You're
That's it.
good at this point because you've gone
Love it.
to Sun Biz, you've gotten your entity, or you go to the state. Secretary of State's usually what it is. But if
Okay.
you go into Dr. Google and
Mhm.
type name search
Mhm.
state, it'll take you to their website,
Okay.
the state's website. And you take a look at it, like Wyoming.
Right.
Wyoming Secretary of State. It's like wy.sos.
Okay.
.gov. And you go in, you make sure the name's available, you fund it, or you form it, you get your articles, you get your bylaw, you then take that, get your name, they approve it. You go to the EIN at the IRS, you then go to your banker, then you're ready for next phase.
I love it. What's the next phase? And that's our next episode. And we're going to dive deeper in the Tax Magic Collective. But what's our next episode? What's our next topic?
The next step is, what do I do with the bank account? How do I
Okay.
fund it properly? Because you have to fund the company properly, which is a corporation. You're going to buy stock in it, be it $100 or $100,000. You capitalize the entity.
Mm.
And in a partnership LLC, you put it in your capital account. You make sure the capital account that you fund matches the paperwork. Then you're ready to rock and roll. And we're going to look at the accounting structure. Look, I hate accounting. I'm going to tell you right now. I hate accounting. Yes, I'm a CPA, but I hate it.
Right. Right.
But you got to do it.
Right.
Because that's your bone structure and your muscles and the skin.
Yeah.
So you've got to do it in order to run the race.
I think our quest is going to be find an AI accountant so that people can use an AI accountant.
And they are out there.
Yeah.
The problem with them is somebody programmed them.
Right. And
And
they
if
might
they,
not be the,
boom, they might not be
So-
the one you want.
so you
So-
might need to do,
I really have, you and I have
Software.
talked about that briefly about my
Yeah.
setting up my own AI
Yeah.
accounting software.
yeah.
I use QuickBooks Online,
Okay.
but the damn thing changes every week.
Right.
I mean,
Right.
now
Yeah.
it says disbursements. It's not disbursements, it's expenses.
Mm.
So it annoys me. So
All right. So
I
we're going
may
to talk
just do
about
that.
creating some type of AI agent so that the accountant can be programmed by you.
That would be great.
Right. All right. We're going to talk about that. And then I'm going to meet with you in the collective, because that
Correct.
is a great club where we can dive a little deeper into some of these entities. But the next
Yep.
episode is what again for them to tune in?
The next one is what you need to do with accounting and
Perfect.
what you need to do to get you to the operations phase.
Perfect. All right.
Which
We'll see you
is where some of your stuff's going to come in, because
Okay.
you're going to have to do AI and social media these days. That's a must.
Right.
So that's
right.
where I'm going to ask you more questions
Okay.
as to how are you going to do this if you're this kind of a company.
Deal. All right. I will see you in the next
Deal.
episode. Thanks for watching the Tax Magic
Bye.
podcast.
Thanks for
And
joining.
we'll see you in the collective. Ciao.
Bye.
This content is for educational and entertainment purposes only and does not constitute professional advice of any kind. Always consult with your tax professional. Be sure to read this full disclosure. Listener discretion is advised.